Good morning, students. So, in today's session, we are going to discuss about the financial decision and the different categories of financial decision. So, when coming to your financial decision, so financial decision it speaks about the decisions which are taken when coming to the financial management. So, this financial management is concerned with totally decision making in three major issues related to the financial operations of the business organization. So, financial management it is concerned with the solution of three major issues relating to the financial operations of the firm, corresponding to the three questions of investment, financing, and dividend decision. So, this is how the financial decisions is been broadly classified. So, it is classified into three. One is investment decision, second one is financing decision, and the third one is dividend decision. So, in financing context, it means in the financial context, it means the selection of the best financing alternatives or best investment alternatives. So, the finance functions is it is classified into three broad categories. One is investment decision, the second one is financing decision, and the third one is dividend decision. One is investment decision, second one is financing decision, the third one is dividend decision. So, investment decision. So, when coming to your investment decision, so here the investment decisions are relating to how the firm's funds are invested in different assets. So, in the investment decisions, it can be long-term investment or short-term investment. So, long-term investment decisions is also called as capital budgeting decision. So these decisions they involve investment in fixed assets which has long term implications. Okay, so the firm's resources are scarce in comparison to the uses to which they can be put. So a firm therefore has to choose where to invest these resources so that they are not getting wasted. So the scarce resources available with the organization has to be used in the effective manner. So they are able to earn what highest possible return for their investors. So it's like the investment has to be done in such a manner that it has to get highest possible return. So the investment decision it relates to how the firm's funds are invested in different assets. So how the firm's funds are invested in different assets. Like I told you, the investment decision it can be a long term investment decision, a long term decision or a short term decision. So long term investment decision is called as capital budgeting decision. So it involves committing the finance on long term basis. For example, like I told you, investing or investment on fixed assets which has a long term implication. So these decisions are very crucial. These decisions are very crucial for any business since they affect the earning capacity in the long run. So the size of asset, profitability, and competitiveness are all affected by the capital budgeting decision. While making any investment on the capital budgeting or that is on the fixed asset, so what an organization has to do is like it has to think before investing in the business organization or in on the what fixed assets of the business organization. The reason is that once it is invested, it is impossible for a business to wringle out, or once invested it is really difficult for a business to wringle out of such decisions or take back those investment which is made. So they are to be taken taken with utmost care. So these decisions must be taken by those who understand them comprehensively. Okay, so a bad capital budgeting decisions normally has a capacity to severely damage the financial fortune of a business. So when coming to your short-term investment, that is your short-term investment decisions, also called as working capital decisions. So long-term investment decisions are called as fixed capital what requirements, or yeah, fixed capital decisions, or fixed capital requirements. So your short-term investment decisions are also called as working capital decisions. So are concerned with decisions about the levels of cash or inventory and receivable. So these totally deal with the day-to-day activities of the business organization. So in order to have, or in order to carry out the business on a day-to-day basis, yes, in order to carry out the business on a day-to-day basis, it is very important that you should have some amount of fund to carry out or to spend for the expenses of the day-to-day basis. So what you can do is like, or what you should do is like, you should see that those things are taken into consideration in a proper manner, so that a proper what solution can be brought into existence. So these affect the liquidity as well as the profitability of business. So efficient cash management, inventory management, and receivables management are essential ingredients of a sound working capital management. So the decisions affect the day-to-day working of a business. So they affect the liquidity as well as profitability of a business. They affect the liquidity as well as the profitability of a business. So efficient cash management, inventory management, and receivable management are essential ingredients of a sound capital management. So the next concept is the factors affecting the capital budgeting decision. So factors affecting the capital budgeting decision. So what are the factors that affects the capital budgeting decision? So a number of projects are often available to the business to invest in, but each project has to be evaluated carefully, and depending on the returns, a particular project is either selected or rejected. So if there is only one project, its viability in terms of rate of return, investment, and its comparability with the industry average is seen. So there are certain factors. So it's like I told you, there are number of projects. So what you have to do is like, before the investment is been done, so each project has to be evaluated carefully. So depending upon the returns, and particular project is either selected or rejected. So what you have to do is like thinking on the things, or you evaluate that, and by knowing, or with the help of the evaluation, you get into a conclusion like whether to take up that particular activity or that particular what a decision or not. Okay, so what are the factors that affects the capital budgeting decisions? So the first one is cash flows of a project. Cash flows of the project. So when a company takes an investment decision, involving huge amount, so it expects to generate some cash flows over a period. So when a company takes an investment decision involving huge amount, it expects to generate some cash flows over a period. So these cash flows are in the form of series of cash receipts and payments over the life of an investment. So the amount of these cash flows should be carefully analyzed before considering the capital budgeting decision. So when a company it takes an investment decision which involves a huge amount, it expects to generate some cash flows over a period. It expects to generate some cash flows over a period. So these cash flows are in forms of series of cash receipts and payments. So these cash flows will be in form of receipts and payment. So what happens is that the amount of these cash flows should be carefully analyzed. They have to be carefully analyzed before considering capital budgeting decision. So before the capital budgeting decision is been considered, what you have to do is like, you have to analyze the things and then get into conclusion relating to the capital budgeting decision. So it is very important to analyze before considering the capital budgeting decision. So the second one is return, that is the rate of return. So the most important criteria is rate of return of a project. So the calculations are based on the expected returns from each proposal and assessment of the risk involved. So what you have to do is like what is, or you have to evaluate the total amount of risk involved in the organization or the return on investment. So what is the return which is expected by you in the business organization? So expected the return from the proposal. Yes, so the calculation are based on the expected return from each proposal and assessment of the risk involved. So what you do is like, so you'll have different proposals. So what you do is like you go on with the return on investment, or what is the amount of return on investment with which the business organization is getting is very important. So what you do is like you evaluate it. Like suppose A and B, like A and B with a rate of return of 10% and 12%. So respectively, then under normal situations, project B should be selected. Yes, because of a reason. See, A and B with the same risk involved. Yes, so risk is same in both A and B. So what happens is like if you're if A has 10% return and B has 12% return, the risk involved is same in both A and B. A ಮತ್ತೆ ಬಿ ಅಲ್ಲಿ ರಿಸ್ಕ್ ಏನು ಇನ್ವಾಲ್ಡ್ ಇದೆ ಅದು ಸೇಮ್ ಇರುತ್ತೆ, ಬಟ್ ಎ 10% ರಿಟರ್ನ್ ಕೊಡುತ್ತೆ, ಬಿ 12% ರಿಟರ್ನ್ ಕೊಡುತ್ತೆ ಅಂತ ಹೇಳುವಾಗ ಏನು ಮಾಡಬೇಕಾಗುತ್ತೆ, ಯು ವಿಲ್ ಹ್ಯಾವ್ ಟು ಬಿ ಸೆಲೆಕ್ಟಿಂಗ್ ಬಿ ಬಿಕಾಸ್ ದ ರೇಟ್ ಆಫ್ in return which is provided on the investment is more than that of the other one. So the third one is the investment criteria involved. The investment criteria involved. So when coming to your investment criteria involved, so the decision to invest in a particular project involves a number of calculation regarding the amount of investment. So investment criteria ಏನಾಗುತ್ತೆ, the decisions to invest in a particular project, it involves a number of calculations regarding the amount of investment, interest rate, cash flows and rate of return. So there are different techniques to evaluate investment proposals which are known as capital budgeting techniques. So these techniques are applied to each proposal before selecting a particular project. So what you have to do is like the techniques, that is investment techniques, have to be used, or capital budgeting techniques have to be used or applied on each proposal before selecting a particular project for the business organization. So like I told you, the decisions to invest in a particular project involves a number of calculations. So when you are investing into certain venture, it's like you think about different aspects. So one may be the amount of investment, the return, that is interest rate, and the cash flows, the rate of return. So all this has to be taken into consideration. So for that reason, what you do is like you use capital budgeting techniques in order to know a proper proposal for the business organization. So the second one is financial decision. So what is this financial decision? So this is all about the quantum of finance to be raised from various long-term sources. So short-term sources are studied under the working capital management. Yeah, so here what we do is like we study about the long-term sources. So when coming to your that is your financing decisions, we learn about the owner's fund and the borrowed fund, that is the owner's fund and the debt fund. Yes, shareholders fund and the debt fund. So financing decisions are concerned with the financing of business activities and the quantum of finance to be raised from the various sources of finance. So the sources of funds for an organization are, one is owner's fund and the second one is borrowed fund. So the shareholder fund, it is nothing but the equity capital and the retained earnings. Yes, it is nothing but the shareholders fund refers to the equity capital and the retained earnings. The borrower funds refers to the finance through debenture and other forms of debt. So firm, what it has to do is like it has to decide the proportion of funds to be raised from either sources. So what is the proportion of fund that has to be raised? So what is the proportion of fund has to be raised? The firm has to decide the proportion of funds to be raised from either sources based on their basic characteristics. So, interest on borrowed funds have to be paid regardless of whether or not a firm has earned the profit. So, the borrowed fund also, likewise, the borrowed fund have to be repaid at a fixed time. Yes. So, both owners fund as well as the borrowers fund has its own merits as well as the demerits. So the risk of default on payment is known as the financial risk. So which has to be considered by the firm likely to have insufficient shareholders to make these what payment. So shareholders fund on the other hand involves no commitment regarding the payment of returns or the repayment of capital. So firm therefore needs to have a judicious mix of both debt and equity in making financing decisions, which may be debt, equity, preference share capital and retained earning. So like I told you, the borrowers fund have to be repaid at fixed amount. So there are like it has both the owners fund as well as the borrowers fund as its own merits as well as demerits. So you can't say that the what owners fund is what advantages or the borrowers fund is an advantage. In some situations what happens is like the borrowers fund becomes more advantageous than the owners fund available in the organizations. Like I told you, the risk of default on the payment is known as the financial risk, which has to be considered by the firm likely to have insufficient shareholders to make these fixed payment. So shareholders fund involve no commitment regarding the payment of return or the repayment of capital. So therefore needs to have a judicious mix of both debt and equity. So there has to be a mixture of both debt and equity in making financing decisions, which may be debt, equity, preferential capital and retained earning. So here the cost of each type of finance has to be estimated. So some sources may be cheaper than the other. So what you have to do is like you have to think about it twice and then take up a proper decision. So sometimes what happens like the debt is considered to be cheapest of all the sources. So tax deductibility of interest makes it still cheaper. So associated risk is also different for each source. So it is necessary to pay interest on debt and redeem the principal amount on maturity. So there is no such compulsion to pay any dividend on equity shares. So thus there is some amount of financial risk in debt financing also. So you can't say that only the equity or the owners fund has certain disadvantage. Even the your borrowers fund also has certain amount of disadvantage. So the overall financial risk arises or depends on the proportion of the capital or debt in the total capital. So the fundraising exercise is also it also costs some amount. So this cost of raising fund is called as the flotation cost. So the next concept is factors affecting financing decisions. So what are the factors which affects the financing decisions? Okay, so the first one is cost. So cost plays a very important role when coming to the financing decisions. Cost plays a very important role while coming to the financing decision. So the cost of raising funds through different sources are different. So it may cost of raising funds through equity or cost of raising funds through debt totally it will have a lot of changes when it comes to cost of raising funds. So it has different sources. So the cost of raising funds through different sources are different. So a prudent financial manager would normally opt for the source which is very cheapest. So ಯಾವುದು cheapest ಇದೆ ಅದನ್ನು ಏನು ಮಾಡಬೇಕಾಗುತ್ತೆ ಸೆಲೆಕ್ಟ್ ಮಾಡಬೇಕಾಗುತ್ತೆ. Good manager will think about deciding or he will think about the investment and then he will raise the funds from the necessity or the proper source. So the second one is risk. So the risk associated with each of the sources. It may be owner's fund or the borrower's fund. It may be owner's fund or borrower's fund is totally different. So the risk associated with each source of fund is totally different. So what you have to do is like you'll have to think about the risk and then invest in the particular aspect. So you have to decide like whether you are going to opt the owner's fund and or borrower's fund. So the third one is flotation cost. So when coming to flotation cost, higher the flotation cost, less attractive the source is. So if the flotation cost is high, if the flotation cost is high, the expenses the expenses which is involved by the business organization will be relatively more. The expenses which is involved by the business organization will be relatively more. So higher the flotation cost, less attractive the source. So when the flotation cost becomes more, then the source of fund becomes less attractive. Why? Because it becomes totally a huge amount or a costliest process. So the fourth one is like cash flow position of a company. Cash flow position of a company. So the stronger cash flow position may have debt financing more viable than funding through equity. So if the business organization has a good cash flow position, yes, if the business organization has a good cash flow position of its own, then what you can do is like you can raise funds through debt financing. Yes, so a stronger cash flow position may make debt financing more viable than funding through equity. So if you have a good amount of fund with you, this, then obviously what you can do is like you can go on with debt financing, because the reason is that the debt financing is the cheapest source of fund. So raising funds through debt financing is the cheapest source of fund. So what you can do is like you can raise the fund in a cheapest price or at a cheapest price without any problem. So it becomes very easy, or it is less costly. So for that reason what you can do is like you can raise funds through debt, because you have fund. So when you have fund, I mean it's like the cheapest mode can be used. So if there is any necessity, then what you can do is like your owner's fund can be utilized in the organization. But still, if you have a good cash flow in the business organization, then debt financing becomes more viable. So the fifth one is fixed operating cost. So if the business has high operating cost, if the business has high operating cost, then what happens is like operating cost is nothing but the cost involved on operation. So it may be building rent, maybe, or salaries, all these things. So they are called as operating cost. So if the business organization has high fixed operating cost, then it must reduce the fixed financing cost. Yes, so when the operating cost becomes more, then it has to reduce the fixed financing cost. So hence low debt financing is better, or lower debt financing is better if the business organization has more operating cost. If the organization has high fixed operating cost like building rent or insurance premium or salaries, then it must reduce the fixed financing cost. So debt can be totally reduced. So hence lower debt financing is better. So if you have more of operating cost ಜಾಸ್ತಿ ಇದ್ರೆ ಏನು ಮಾಡ್ಬೋದು, ಅಲ್ಲಿ ಡೆಟ್ಸ್ ಅನ್ನ ಅಥವಾ ಡೆಟ್ ಫಿನಾನ್ಸಿಂಗ್ ಅನ್ನ ಕಡಿಮೆ ಮಾಡ್ಬೋದು. ಸೊ ಇಫ್ ಫಿಕ್ಸ್ಡ್ ಆಪರೇಟಿಂಗ್ ಕಾಸ್ಟ್ ಇಸ್ ಲೆಸ್, ದೆನ್ ಮೋರ್ ಫಿನಾನ್ಸಿಂಗ್ ಕ್ಯಾನ್ ಬಿ ಪ್ರಿಫರ್ಡ್. ಸೊ ಯಾವಾಗ ನಿಮ್ಮ ಫಿಕ್ಸ್ಡ್ ಆಪರೇಟಿಂಗ್ ಕಾಸ್ಟ್ ಕಡಿಮೆ ಇದೆ, ಅಂಥ ಸಿಚುವೇಶನ್ಗಳಲ್ಲಿ ಏನು ಮಾಡ್ಬೋದು, ಯು ಕ್ಯಾನ್ ಪ್ರಿಫರ್ ದಿ ಡೆಟ್ ಫಿನಾನ್ಸಿಂಗ್. ಎಸ್, ಡೆಟ್ ಫಿನಾನ್ಸಿಂಗ್ ಕ್ಯಾನ್ ಬಿ ಪ್ರಿಫರ್ಡ್ ಇನ್ ಕೇಸ್ ದಿ ಆಪರೇಟಿಂಗ್ ಕಾಸ್ಟ್ ಇಸ್ ಲೆಸ್. So the next one is like control consideration. So when coming to your control considerations, the issues of more equity may lead to dilution of management's control over the business. So when you issue more of equity, what happens, like the management control becomes diluted. So the reason is like I told you that equity shareholders are called as the owners of the business organization. So the equity shareholders, they will have right on the managerial activities of the business organization. So when they have right on the managerial activities of the business organization, see, when equity raised by the business organization becomes more, what happens is like the amount of shareholders in the organization increases. So for example, ಮೊದಲು 100 ಶೇರ್ಸ್ ಇತ್ತು. ಸೊ ಫಂಡ್ ರೈಸ್ ಮಾಡಲಿಕ್ಕೆ ಅಥವಾ ಫಿನಾನ್ಸನ್ನು ರೈಸ್ ಮಾಡ್ಲಿಕ್ಕೆ ನಾವೇನು ಮಾಡ್ತೀವಿ, ಆ 100 ಶೇರ್ಸ್ಗೆ ನಾವೇನು ಮಾಡ್ತೀವಿ, ಇನ್ನೊಂದು 100 ಸೇರಿಸ್ತೀವಿ. ಸೊ ಫಸ್ಟ್ ಎಷ್ಟು ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಇದ್ರು, 100 ಶೇರ್ಸ್ ಅನ್ನುವಾಗ ದೇರ್ ಆರ್ ಚಾನ್ಸಸ್ ದಟ್ ಕೆಲವೊಮ್ಮೆ 50 ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಇರ್ಬೋದು ಅನ್ಕೊಳ್ಳೋಣ. ಜಸ್ಟ್ ಫಾರ್ ಎಕ್ಸಾಂಪಲ್ 100 ಶೇರ್ಸ್ ಇತ್ತು, 50 ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಇದ್ರು. ಇವಾಗ ಏನಾಯಿತು, ಪುನಃ 100 ಶೇರ್ಸ್ನ ಇಂಟ್ರೊಡ್ಯೂಸ್ ಮಾಡಿದ್ರು ಫಾರ್ ಅ ರೀಸನ್ ದಟ್ ದಿ ಫಂಡ್ಸ್ ಆರ್ ದಿ ಫಿನಾನ್ಸ್ ಇನ್ ದಿ ಆರ್ಗನೈಸೇಷನ್ ಹ್ಯಾಸ್ ಟು ಬಿ ರೈಡ್. ಆರ್ಗನೈಸೇಷನ್ದು ಫಿನಾನ್ಸನ್ನು ರೈಸ್ ಮಾಡಲಿಕ್ಕೆ ಪುನಃ 100 ಶೇರ್ಸನ್ನು ಇಶ್ಯೂ ಮಾಡ್ತಾರೆ. ಸೊ ಏನು ಮಾಡ್ತಾರೆ, ಒಂದು 40 ಜನ ಏನು ಮಾಡ್ತಾರೆ, ಹೊಸ ಶೇರ್ಸನ್ನು ಪರ್ಚೇಸ್ ಮಾಡ್ತಾರೆ. ಸೊ ಆಲ್ರೆಡಿ 50 ಮೆಂಬರ್ಸ್ ಈಕ್ವಿಟಿ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಇದ್ದರು. ಇವಾಗ ಹೊಸದಾಗಿ 40 ಜನ ಈಕ್ವಿಟಿ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಏನಾದರೂ ಸೇರಿಕೊಂಡ್ರು. ಸೊ ಆರ್ಗನೈಸೇಷನಲ್ಲಿ 50 + 40 90 ಮೆಂಬರ್ಸ್ ಆಯ್ತಾರೆ. ಸೊ ಫಸ್ಟ್ ಏನಾಯಿತು, 50 ಮೆಂಬರ್ಸ್ ಮಾತ್ರ ಮ್ಯಾನೇಜ್ಮೆಂಟಲ್ಲಿದ್ದರು ಅಥವಾ ಮ್ಯಾನೇಜರಲ್ ಕಂಟ್ರೋಲ್ ಬರೀ 50 ಮೆಂಬರ್ಸ್ಗೆ ಮಾತ್ರ ಇತ್ತು. ಇವಾಗ 100 ಶೇರ್ದು ಹೊಸ 40 ಜನ ಬಂದಾಗ ಏನಾಯಿತು, 50 + 40 90 ಮೆಂಬರ್ಸ್ಗೆ ಏನಾಯಿತು, ಮ್ಯಾನೇಜರಿಯಲ್ ಕಂಟ್ರೋಲ್ ಬಂತು. ಸೊ 90 ಮೆಂಬರ್ಸ್ಗೆ ಮ್ಯಾನೇಜರಿಯಲ್ ಕಂಟ್ರೋಲ್ ಬರುವಾಗ ವಾಟ್ ಹ್ಯಾಪನ್ಸ್ ಇಸ್ ಲೈಕ್ ದ ಕಂಟ್ರೋಲ್ ಇಟ್ ಟೋಟಲಿ ಗೆಟ್ಸ್ ಡೈಲ್ಯೂಟೆಡ್. ಸೊ ನಾನು ನಿಮ್ಮ ಫಸ್ಟ್ ಇಯರ್ನಲ್ಲಿ ಹೇಳಿದೆ, ಈಕ್ವಿಟಿ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಆರ್ ಕಾಲ್ಡ್ ಆಸ್ ದಿ ಓನರ್ಸ್ ಆಫ್ ದಿ ಬಿಸ್ನೆಸ್ ಆರ್ಗನೈಸೇಷನ್. ಅವರು ಬಿಸ್ನೆಸ್ ಆರ್ಗನೈಸೇಷನ್ದು ಓನರ್ ಅಂತೇಳಿ ಕನ್ಸಿಡರ್ ಮಾಡ್ತಾರೆ ಅಂತ. ಸೊ ದೇ ಹ್ಯಾವ್ ವೋಟಿಂಗ್ ರೈಟ್ಸ್. ಸೊ ಮೊದಲು 50 ಜನ ವೋಟ್ ಮಾಡ್ತಾ ಇದ್ರು ಬೋರ್ಡ್ ಆಫ್ ಡೈರೆಕ್ಟರ್ಸ್ಗೆ. ಎಸ್, ಓಕೆ. ಸೊ ಇವಾಗ ಏನಾಯಿತು, ಆ 50 ಜೊತೆ ಹೊಸ 40 ಜನ ಸೇರಿ 90 ಜನ ಏನು ಮಾಡಬೇಕು, ವೋಟಿಂಗ್ ಮಾಡಬೇಕು. ಸೊ ಏನಾಗುತ್ತೆ, ಅಲ್ಲಿ ಆ ವೋಟಿಂಗ್ ರೈಟ್ಸ್ ಕೂಡ ಡೈಲ್ಯೂಟ್ ಆಗುತ್ತೆ. ಸೊ ಎಕ್ಸೆಸ್ ಆಫ್ ಇಕ್ವಿಟಿ ವಿಲ್ ಲೀಡ್ ಟು ಡೈಲ್ಯೂಷನ್ ಆಫ್ ಮ್ಯಾನೇಜ್ಮೆಂಟ್ ಕಂಟ್ರೋಲ್ ಓವರ್ ದಿ ಬಿಸ್ನೆಸ್ ಆರ್ಗನೈಸೇಷನ್. ಸೊ ಏನಾಗುತ್ತೆ, ಮೊದಲು 10 ಜನ, ಫಾರ್ ಎಕ್ಸಾಂಪಲ್ 10 ಜನ ನಡೆಸ್ತಾ ಇದ್ದ ಬಿಸ್ನೆಸ್ ಅಥವಾ 10 ಜನ ಕಂಟ್ರೋಲ್ ಮಾಡ್ತಿದ್ದ ಬಿಸ್ನೆಸ್ ಇವಾಗ ಏನಾಗುತ್ತೆ, 20 ಜನರ ಹತ್ರ ಹೋಗುವಾಗ ಏನಾಗುತ್ತೆ, ಕಂಟ್ರೋಲ್ ಇನ್ನೂ ಡೈಲ್ಯೂಟ್ ಆಗುತ್ತೆ. ಕಂಟ್ರೋಲ್ ಇನ್ನೂ ಈಸಿ ಆಗುತ್ತೆ, ಎಲ್ಲರ ಕೈಯಲ್ಲೂ ಕಂಟ್ರೋಲ್ ಬಂದ ಹಾಗೆ ಆಗುತ್ತೆ. ಸೊ ಅಂಥ ಸಿಚುವೇಶನ್ಗಳು ಈಕ್ವಿಟಿ ರೈಸ್ ಮಾಡೋದ್ರಿಂದ ಬಿಸ್ನೆಸ್ಗೆ ಬರುತ್ತೆ. ಸೊ ದೇರ್ ಆರ್ ಚಾನ್ಸಸ್ ದಟ್ ದ ಬಿಸ್ನೆಸ್ have to come across these kind of situation if the equity is raised in the business organization. So when it comes to debt financing, it has no such implications. So companies afraid to take over bid would prefer debt to equity. So the organization which is scared or which is afraid of takeover bid would prefer debt over ಈಕ್ವಿಟಿ. ಸೊ ಯಾರು ಅಲ್ಲಿ ಟೇಕ್ ಓವರ್ ಬಿಡ್ಡನ್ನು ಎದುರುತ್ತಾರೆ ಅಥವಾ ದ ಒನ್ ಹೂ ಆರ್ ಎಫ್ರೇಡ್ ಆಫ್ ದಿಸ್ ಟೇಕ್ ಓವರ್ ಬಿಡ್ ವಿಲ್ ಪ್ರಿಫರ್ what debt more than equity, will prefer debt more than equity. So the next one, that is the last one under the factors affecting financial decision is state of capital market. So when coming to your state of capital market, the health of capital market may also affect the choice of source of fund. Health of capital market may also affect the choice of source of fund. So during the period when stock market is rising, more people invest in equity. When stock market is rising, ಯಾವಾಗ stock market ಜಾಸ್ತಿ ಮೇಲೆ ಹೋಗುತ್ತೆ, ಎಸ್, ಅವಾಗ ಏನಾಗುತ್ತೆ, more people will invest in equity. So the depressed capital market may issue equity shares, make issue of equity shares difficult for any company. So ಯಾವಾಗ ಕ್ಯಾಪಿಟಲ್ ಮಾರ್ಕೆಟ್ ಡಿಪ್ರೆಷನ್ಗೆ ಹೋಗುತ್ತೆ, ಅವಾಗ ಏನಾಗುತ್ತೆ, ಇಟ್ ಮೇ ಮೇಕ್ ಇಶ್ಯೂ ಆಫ್ ಈಕ್ವಿಟಿ ಶೇರ್ಸ್ ಡಿಫಿಕಲ್ಟ್ ಫಾರ್ ಎನಿ ಕಂಪನಿ. ಸೊ ಯಾವುದೇ ಕಂಪನಿಗೆ ಅವರ ಶೇರ್ಸನ್ನು ಸೇಲ್ ಮಾಡಲಿಕ್ಕೆ ಕಷ್ಟ ಆಗುತ್ತೆ. ಸೊ ಇಟ್ಸ್ ಲೈಕ್ ಯಾವಾಗ ಶೇರ್ಸ್ ಪ್ರೈಸ್ ಮೇಲೆ ಹೋಗುತ್ತೆ, ಯಾವಾಗ ಸ್ಟಾಕ್ ಮಾರ್ಕೆಟ್ ರೈಸ್ ಆಗುತ್ತೆ. ಸೊ ಸ್ಟಾಕ್ ಮಾರ್ಕೆಟ್ ಯಾವಾಗ ರೈಸ್ ಆಗುತ್ತೆ ಆವಾಗ ಶೇರ್ಸ್ಗೆ ವ್ಯಾಲ್ಯೂ ಇರುತ್ತೆ. ಸ್ಟಾಕ್ ಮಾರ್ಕೆಟ್ ಯಾವಾಗ ಡಿಪ್ರೆಸ್ಡ್ ಹೋಗುತ್ತೆ, ಕೆಳಗೋಗುತ್ತೆ, ಆವಾಗ ಶೇರ್ಸನ್ನು ಸೇಲ್ ಮಾಡೋದೇನಾಗುತ್ತೆ, ಕಷ್ಟ ಆಗುತ್ತೆ. ಸೊ ದಟ್ ಈಸ್ ಅ ಡ್ರಾಬ್ಯಾಕ್ ಆಫ್ ದಿ ಈಕ್ವಿಟಿ funds or the shareholders fund. So this is how your dividend, that is your financing decision work. So ಇಲ್ಲಿ you have to have a thorough knowledge regarding so what is the equity or what amount of what owner's fund has to be in the business organization, and what amount of the borrower's fund has to be raised in the business organization. So a business organization cannot go fully with equity, that is the owner shareholders fund, or fully with the borrowers, or that is debt funds. Yes, ಯಾವುದೇ ಕಾರಣಕ್ಕೆ ಪೂರ್ತಿ ಇಂಥದ್ದು ಓನರ್ಸ್ ಫಂಡಿಗೆ ಅಥವಾ ಪೂರ್ತಿ ಬೋರೋವರ್ಸ್ ಫಂಡಿಗೆ ಹೋಗ್ಲಿಕ್ಕೆ ಆಗಿಲ್ಲ. ಏನು ಮಾಡಬೇಕಾಗುತ್ತೆ, ಯು ವಿಲ್ ಹ್ಯಾವ್ ಟು ಸ್ವಿಚ್ ಆ್ಯಂಡ್ ಯು ವಿಲ್ ಹ್ಯಾವ್ ಟು ಮೇಕ್ ಅ ಬ್ಯಾಲೆನ್ಸ್ ಆಫ್ ಬೋತ್ ದಿ ಓನರ್ಸ್ ಆಸ್ ವೆಲ್ ಆಸ್ ದಿ ಬಾರೋವರ್ಸ್ ಫಂಡಲ್ಲಿ ಓನರ್ಸ್ ಮತ್ತು ಬಾರೋವರ್ಸ್ ಫಂಡನ್ನು ಏನು ಮಾಡಬೇಕಾಗುತ್ತೆ, ಬ್ಯಾಲೆನ್ಸ್ ಮಾಡಬೇಕಾಗುತ್ತೆ.